What if I told you that right now, we're sitting at one of those rare moments again? A moment where the smart money isn't listening to the doom and gloom headlines, but quietly positioning for what could be one of the biggest wealth-building years in recent history. But here's the problem: most investors have no idea where that money is actually flowing. They're still buying yesterday's winners, while the real opportunities are hiding in plain sight. So today, I am breaking down the 10 best investments experts actually expect to outperform in 2026 from AI infrastructure plays that are still underpriced, to the crypto on-ramps institutions are using, to the ETFs that give you exposure to all of it, without the guesswork. This isn't speculation. This is where the smart money is moving right now. Let's get into it. But before we jump into the picks, you need to understand why 2026 could be exceptional. There are 3 massive tailwinds converging. Tailwind number 1, AI infrastructure spending is accelerating. According to Goldman Sachs, global AI infrastructure spending is expected to hit $200 billion in 2026, up from about $150 billion in 2025. This isn't slowing down. If anything, it's speeding up as companies realize AI isn't optional anymore, it's survival. Tailwind number 2, institutional crypto adoption is real now. BlackRock's Bitcoin ETF, launched in early 2024, has already pulled in tens of billions. That's pension funds, endowments, and family offices, not retail gamblers. When institutions move, they move with conviction and capital that dwarfs anything retail can do. And tailwind number 3, rate cuts are creating a risk-on environment. The Fed has signaled potential rate cuts in 2026 if inflation continues cooling. Lower rates mean cheaper borrowing, higher valuations for growth stocks, and more risk appetite across the board. Translation: the environment is set up for growth assets to run. The question is not if money will flow, it's where it flows first. And that's what we're answering today. Let's start with the category that is driving everything else: artificial intelligence and the semiconductors that power it. Investment number 1, NVIDIA. I know NVIDIA feels obvious at this point. But here is why it is still the top pick for 2026. According to analysts at Baron S. and Wedbush Securities, NVIDIA isn't just selling chips anymore. They're building the infrastructure for the entire AI economy. Their GPS power everything from chat to autonomous vehicles to drug discovery platforms. And here's the kicker: demand is still outpacing supply. Microsoft announced in November 2025 that they raised spending $50 billion on AI infrastructure over the next 2 years. Guess whose chips they're buying? Almost entirely NVIDIA. The AI boom isn't over, it's barely started. NVIDIA is the pickaxe in this gold rush. Investment number 2, Broadcom. Now, Broadcom is the name most people aren't watching closely enough, and that's a mistake. While everyone obsesses over NVIDIA, Broadcom has quietly become the supplier of custom AI chips, what they call, as next to Google, Meta, and other hyperscalers who want to build their own specialized AI hardware. Plus, they dominate networking infrastructure. As AI workloads get distributed across cloud platforms, someone has to move all that data. That someone is Broadcom. Investment number 3, Microsoft. Microsoft might seem like a boring pick, but hear me out, they're the best AI monetization story in the market right now. They own a massive stake in OpenAI, they're integrating AI into every product, and their cloud business, Azure, is growing faster than Oz in AI workloads. Here is a mind-blowing stat: Microsoft is on track to generate $10 billion in AI-related revenue in 2025. Analysts expect that to double in 2026. And unlike pure-play AI startups that might not exist in 5 years, Microsoft has been printing money for decades. This is a safe bet with massive upside. Investment number 4, Palantir. All right, Palantir is more controversial, but it's absolutely worth discussing because this is the enterprise AI adoption story. Palantir builds AI platforms for governments and massive corporations to make sense of their data. Think the Pentagon using it to coordinate military operations, or pharmaceutical companies using it to speed up drug trials. According to a report from Javaro, Palantir's commercial business grew 54% year-over-year in Q3 2025. That is the part most people miss. Everyone focuses on their government contracts, but it's the commercial side that's exploding. Now, full transparency, Palantir is more volatile than Microsoft or Broadcom. The valuation is rich. But if enterprise AI adoption continues at this pace, Palantir could be one of those 10x stories over the next decade. So that's the AI and semiconductor category. But what if you don't want to pick individual stocks? That's where ETFs come in. Let me be clear, ETFs are not boring. They're strategic. And if you're building wealth for the long term, they should be the foundation of your portfolio. Here are 3. Investment number 5, SPDRS and P500 ETF, SPY. Yes, the S&P 500. I can hear some of you groaning. It's not exciting, you're right. But you know what it is? Consistent. The S&P 500 has returned an average of 10% per year over the last century. Through wars, recessions, pandemics, it keeps going up over time. If you do nothing else from this video, put a portion of your portfolio in SPY and let it ride. Investment number 6, Defiance Quantum ETF, QTUM. Now, if you want something more cutting edge, check out QTUM. This fund gives you exposure to frontier technologies, quantum computing, AI hardware, machine learning, and next-gen semiconductors. Holdings include companies like NVIDIA, AMD, and IBM. According to thematic investing research, quantum computing could be a $100 billion market by 2030. QTUM gives you a basket of companies positioned to win without having to pick the winners yourself. Investment number 7, iShares Bitcoin Trust, IBIT. And here's the ETF that's changed everything for crypto investing. This is BlackRock's Bitcoin ETF, and it is the single easiest way for traditional investors to get Bitcoin exposure without dealing with wallets or exchanges. Since its launch, IBIT has seen over $30 billion in inflows that is institutional money flooding into Bitcoin for the first time in a tax-efficient, regulated vehicle. If you believe Bitcoin is digital gold and want exposure, IBIT is how you do it in 2026. All right, let's talk crypto. And I'm going to be honest with you, this is where opinions get heated. But whether you love it or hate it, ignoring crypto in 2026 is like ignoring the internet in 1999. You might be right short term, but you're probably wrong long term. Let's start with the safer play. Investment number 8, Coinbase. Coinbase is the largest regulated crypto exchange in the US. They're the toll booth for the entire industry. Here's what makes them interesting for 2026. They're diversifying beyond just trading fees. They're building staking services, custody for institutions, and even a layer to blockchain called Base. In Q3 2025, Coinbase's revenue jumped 79% year-over-year. If Bitcoin and Ethereum rally in 2026, Coinbase's revenue could double. You're not just betting on Bitcoin, you're betting on the entire ecosystem growing. Investment number 9, Bitcoin, the king, the OG. Here's the bull case for Bitcoin in 2026, backed by actual analysts. Institutional adoption is accelerating. BlackRock, Fidelity, and others now offer Bitcoin ETFs. The 2020 for having cut new Bitcoin supply in half. Historically, prices surged 12 to 18 months post-halving. That window is 2025 to 2026. And the macro environment favors hard assets. Some analysts are calling for $150,000 to $200,000 Bitcoin in 2026 if conditions align. Finally, investment number 10, Ethereum. The smart contract platform that powers DeFi and NFTs. Why Ethereum for 2026? 2 reasons. Ethereum ETFs also launched in 2024, so institutional access is open. And 2, tokenization of real-world assets. Major financial institutions are experimenting with tokenizing stocks and bonds on Ethereum. If that trend accelerates, Ethereum becomes the rails for a multi-trillion-dollar market. Now, full disclosure, crypto is volatile. These aren't safe, boring investments. Most experts suggest 5 to 10% of your portfolio max. All right, we've covered 10 investments. But before you rush to your brokerage app, let's talk reality. Reality check number 1, analyst targets aren't guarantees. Those S&P 500 targets are based on assumptions. If any of those assumptions break, those targets go out the window. Invest based on your risk tolerance, not hype. Reality check number 2, concentration risk is real. If you buy all for AI stocks, you're concentrated in one theme. Balance is key. Mix growth with stability. And reality check number 3, crypto can go to zero. It has crashed 80% plus multiple times. Only invest what you can afford to lose completely. The best investors understand risk, diversify intelligently, and stick to a plan. All right, let's bring it home. Those are the 10 most compelling investment ideas for 2026. You've got AI infrastructure with NVIDIA, Broadcom, Microsoft, Palantir. Diversified ETF exposure with SPY, QTUM, and IBIT. And crypto plays with Coinbase, Bitcoin, and Ethereum. Whether you're conservative or aggressive, you now have a roadmap. But here's the thing, information without action is just entertainment. The difference between people who build wealth and people who just watch videos about it is execution. So here's what I want you to do. Drop a comment right now and tell me, are you building a crypto-heavy portfolio in 2026? Or are you sticking with traditional stocks and ETFs? I read every single comment, and I'm genuinely curious where your head's at. Second, if you found this valuable, hit that subscribe button and turn on notifications. We post weekly deep dives like this to help you build wealth intelligently. This channel isn't about getting rich quick. It's about getting rich slowly, consistently, and intelligently. Remember, the best time to plant a tree was 20 years ago. The second best time is today. 2026 could be an incredible year for investors who position themselves correctly. Don't let it pass you by. Thanks for watching. I'll see you in the next one.